This video covers the first quarter financial results of 7&I Holdings for fiscal year 2025, the period from March 2025 to May 2025. The video will also explain Couche-Tard's decision to abandon the acquisition. 7&I Holdings is a large Japanese retail holding company that owns 7-Eleven convenience stores. It was established in 2005 by combining Ito-Yokado, 7-Eleven Japan, and other businesses. The company operates convenience stores, supermarkets, department stores, and financial services worldwide. Executive Summary. 7&I Holdings experienced growth in consolidated revenues and operating income in the first quarter of fiscal year 2025. Net income grew significantly due to special gains and reduced special losses. The full-year forecast remains unchanged, and management continues to implement initiatives to enhance corporate and shareholder value. Consolidated results highlight. In the first quarter of fiscal year 2025, 7&I reported revenues of 2,777.3 billion yen, 1.6% increase year-over-year, operating income of 65 billion yen, 9.7% increase. Foreign exchange rates also had a positive impact, adding 200 million yen to operating income. In the first quarter of fiscal year 2025, 7&I earned a special gain by selling property and equipment, specifically from the sale of Ito-Yokado store assets. Additionally, most of the restructuring efforts for unprofitable businesses and assets were completed in fiscal year 2024, which led to a large decrease in special losses. As a result of both the special gains and the reduced losses, FY2025 net income rose to 49 billion yen, 2.3 times higher than the previous year. The progress rate against net income annual forecast of 255 billion yen is only 19%. It seems that the first quarter usually has lower sales compared to other quarters, so this progress rate is okay. Breaking down performance by segment. For domestic CVS, convenience store operations, sales at existing stores rose due to a stronger lineup of high-value-added products, and the average spending per customer also increased. However, profits declined because the product mix did not sufficiently reflect detailed customer pricing preferences, leading to a lower profit margin. Additionally, SG&A expenses rose, and the increases in personnel and rent costs were not offset by reductions in other areas. In contrast, overseas CVS convenience store operations, although still facing weak growth in same-store sales, showed improved profitability. This was due to better gross margins and effective control of SG&A expenses. In the superstore segment, profits increased as a result of structural reforms. Meanwhile, in the other segment, specialty store businesses such as Loft, Akachan Hampo, and 7&I Food Systems performed strongly, contributing to higher overall profits. Altogether, these results led to a consolidated increase in profit for the company. SEJ, 7-Eleven Japan. 7-Eleven Japan saw a 0.6% increase in existing store sales, supported by improvements in pricing strategy and product mix, although operating income declined by 6.7 billion yen due to rising costs in advertising, personnel, and rent. A significant challenge was the 0.7% drop in customer traffic. In Japan, 7-Eleven has an image of offering more expensive premium products compared to the competitors, Lawson and Family Mart. Consumers have been turning away from 7-Eleven's high-priced products, and as a result, Lawson and Family Mart achieved better financial results in the most recent quarter. To improve this situation, 7-Eleven is implementing several initiatives. Efforts to strengthen high-value-added merchandise have proven effective, with daily sales of freshly made counter items increasing by 3.8%, thanks to stronger offerings such as hot foods, new teas, and smoothies. SIP initiatives and nationwide rollout of 7NOW has also resulted in sales growth. SIP initiative stands for 7-Eleven and Ito-Yokado Partnership, a collaboration between 7-Eleven Japan and Ito-Yokado Supermarket to develop and test a new mini supermarket store format. 7 Now is a delivery service that delivers convenience store items quickly to customers. However, despite these improvements, strong overall sales growth and a full recovery in gross profit margins have yet to be achieved. Given the ongoing tough consumer environment and the shift toward more price-driven options like supermarkets and drugstores, it is crucial to enhance awareness of these initiatives and the value of the products offered. SEI 7-Eleven Inc. 7-Eleven in the U.S. Improved merchandise gross margins, despite flat same-store sales and lower fuel volume, achieving a $43 million year-over-year increase in operating income. Pricing strategy changes helped increase average customer spend, although customer traffic remains a challenge. The U.S. operations expanded their proprietary products and restaurant business, resulting in higher margins. The food and beverage modernization program and private brand development contributed to profitability. 7-Eleven Inc. also progressed in digital and delivery, with more 7 Now-enabled stores and solid sales. Cost efficiency improved through controlled SG&A and system upgrades. The store network grew with 26 new openings, including 16 standard stores, adapting to changing consumer behaviors and preferences. Progress of management initiatives. Preparations for the IPO of 7-Eleven Inc. are moving forward as planned. IPO, initial public offering, is planned on a major U.S. stock exchange, with 7&I retaining majority ownership, while the goal is to clarify 7-Eleven Inc.'s standalone value and enable independent market valuation. Regarding shareholder returns, as of the end of June, 7&I has repurchased a total of 156.2 billion yen in its own shares, achieving 26% of its planned share buyback amount. Regarding its business portfolio transformation, the company is on track to complete the separation of its SST Superstore division by September 1st, and it finished spinning off 7-Bank on June 24th. 7&I is making steady progress on management initiatives. Alimentation Couche-Tard withdraws 7&I takeover bid. Canadian convenience store giant Couche-Tard has withdrawn its $46 billion bid to acquire Japan's 7&I Holdings. Couche-Tard said it ended the takeover attempt because 7&I failed to engage meaningfully and left important due diligence questions unanswered. On the other hand, 7&I stated that Couche-Tard's decision was regrettable and argued that it had engaged in sincere and constructive discussions to reach an agreement. It also said that it will continue to carry out measures to create value on its own, including considering a potential listing of its convenience store business in North America. The deal would have been Japan's largest ever foreign acquisition. Following the news, 7&I's stock price fell sharply, while Couche-Tard may now refocus on its existing businesses and other growth opportunities. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 1,933 yen as of July 18th, and the US dollar stock price is $13.42 as of July 17th. Following the news of Couche-Tard's decision to abandon the acquisition, 7&I's stock price dropped significantly. The current PBR is 1.29, and the PER is 19.1, with a dividend yield of 2.59%. Compared to the past few years, PBR, PER, and dividend yield indicate that the current stock price is relatively low. The stock price had been relatively high recently due to expectations for Couche-Tard's takeover bid, but after a significant drop following the news, it is now relatively cheap compared to before. Conclusion. First quarter results. For fiscal year 2025 were okay, with revenue and operating income showing modest recovery. The company continues to execute its strategic transformation, completing important business spin-offs, advancing its substantial share buyback program. Even after Couche-Tard abandoned its bid, SVNDY remains focused on enhancing shareholder value through internal initiatives and disciplined capital deployment. With the new president in place, the key will be how management reforms steer the company toward a convenience store-centric model.